Hi, my grade 11 students. Today, we are practicing some questions to cover accrued expense and accrued income. We are doing now financial statement with adjustments, right? In the last video, we discussed about what are the adjustments, how to record the adjustments in the financial statements, right? So, today, I'll give some questions, some activities to understand well how do we do the adjustments in the financial statements and how to record them in the general journal. Remember this, we maintain prime entry books. We maintain prime entry books to record different transactions. Cash book maintains to record cash movements. Cash book is one of the prime entry book. The other one is petty cash book. Petty cash book, we record only the petty cash expenses, right? Then bank account. Bank account, we record bank related transaction, check deposit, check payments and those things, right? Then purchase journal. In the purchase journal, we record only the trade items purchase on credit. Trade items purchase on credit. Trade items sold on credit, where we record in the sales journal, right? Then the other journal is general journal. In the general journal, we can record all other transactions which were not recorded in other prime entry books. Adjustment entries. Adjustment entries. In O-level paper, they will give under the second paper question number 7 financial statement questions, including additional information. Additional information, that part is called what? Adjustments. Where we record the adjustment. What is the prime entry book we maintain to record these adjustment entries? It is the general journal, right? General journal, after that ledger accounts, then we can do necessary changes in the financial statements. Financial statements, profit and loss statement and statement of financial position. Okay. Today, we go to the slide now. Practice questions. Enter the following adjustments in the general journal. Why they ask general journal? Because journal adjustment entries are recorded in the general journal. That's why, right? Then following details are provided of Nayan East business. Nayan East business for the year ended 31st December 2020. Okay. There are 6 transactions, not 5, 6 transactions. Monthly billed in rent is 8,000 but paid only 8 months. Electricity bill was paid by cash 18,000. Month of December bill of 3,000 still not paid. Interest rate of 12% annually is for the bank loan 80,000 which had been taken on 1st of December 2020. December month interest was not paid yet. Okay. Fourth one. Accrued telephone bill as at 31st December 2020 is 3,000. Carriage inwards to be paid 2,000. Annual stationery expense is 19,000 but paid only 5,000. These are the transactions, these are the adjustment related transactions are provided us, not us, provided you by me, right? Okay, now just we read. Then what they ask, remember this, end of the question, they ask the required things, what they required from us. Remember, I'll tell it now. Adjustment entries where we record in the general journal. Where? General journal. After that, we have to do the changes in the ledger accounts. We have to do necessary changes in ledger accounts. Finally, ledger account details we enter to the financial statement. It means profit and loss statement and statement of financial position. Then there are 6 transactions. We do one by one. It's better. When I do the first one, you can understand something, right? When I do the second one, you can understand more thing, right? When I do the third one, you can understand lot of things, right? Then when I do one by one, you can understand step by step, right? So everyone take your book and pens to write down the notes and important things what I teach you today, right? Okay, I think you are ready, right? Now, monthly built-in rent is 8,000 but paid only 8 months. When I draw the profit and loss statement, there we record only annual income and annual expenses. Annual income and annual expenses. What do you mean by annual income? Whether we received or not by cash, whether we received or not received by cash, we consider annual income is how much? That income amount we write in the profit and loss statement. Expenses also the same thing, same way. Why? Whether we paid or not, annual expenses we record in the profit and loss statement as expense, right? Now see here, monthly built-in rent is 8,000 but paid only 8 months. First we have to calculate how much the total built-in rent expense for the year. Monthly built-in rent is 8,000. Yeah. Monthly rent is 8,000. Okay. How many months to be paid? Normally how many months? 12 months, no? Then into 12. Right? Then how much the annual rent expense? This is an expense, right? Not the income, expense. How much? 96,000. 96,000. But paid only 8 months. Right? 8 months. Then they have paid by cash only 8 months portion. 8 months. Then 1 month they should pay 8,000. How many months they already paid? Only 8 months. Then by cash, how much they have paid? 64,000. Right. How much the to be paid expense? They have to pay how much more? 32,000. 32,000. Check, is it correct or wrong? Correct, no? Right? 8,000 into 12 months, how much? 96,000. It is the annual built-in rent expense. For the whole year, they should pay how much? 96,000. But they have paid only 8 months. 8 into 8,000, 64,000. Try to understand well. Right? Then, how much they want to pay more? 32,000. Tell me, how much the amount that they have recorded in their books, in the cash book and ledger accounts? Only the paid amount, no? How much the paid amount? Paid amount is how much? 64,000 they have recorded in the credit side of their cash account and built-in rent expense account also. Debit side, you can see how much. How much you can see? Only the paid amount by cash. How much? 64,000. But can you record only 64,000 in the profit and loss statement? No. Annual expense how much? the total expense for the year, 96,000. We have to record now this other 32,000 building rent, payable building rent, we call for that payable, right? Accrued, payable, payable, accrued, same thing, right? Accrued, payable, accrued, same thing in the ledger accounts, and we have to enter them in the general journal. In the last video, I have given you what is the double entry for the accrued expense. Relevant expense account, debit side. Accrued expense we write in the credit side in the relevant accrued expense account. You must remember, if you forget it, you go back to the previous video and you watch again and then you watch this video, right? Okay, now first we record them in the general journal, general journal. Then we draw the general journal. We draw the general journal. This is the general journal format. Everybody draw with me general journal. Date, journal voucher, description, debit, credit. There's another column but no need. It's not compulsory, right? Then general journal. Then I draw T accounts also. Why T accounts? T accounts means what? What are they? T accounts mean ledger accounts, right? Mostly we use as T, but I draw here full format of the ledger accounts. Date, description, ledger folio, value, date, description, ledger folio, value. Two accounts needed here. Okay. Now I drew what? General journal. Why we draw the general journal? You know, adjustment entries are recorded in the general journal, right? After that, what we do? The next step is post them to the ledgers. That's why I drew two ledgers. Two ledgers are enough. After doing this, all the adjustment in the general journal and ledger accounts, next step is we post them to the financial statements. Then after that, we have to draw what? We have to draw profit and loss statement, not the full format, only the part of the profit and loss and part of the statement of financial position. Statement of financial position. Okay. Now, I draw profit and loss statement part, only the extract of the profit and loss statement, right? This is the profit and loss statement, not the full format, right? I need only the, here I draw two columns, not the three column. Why? Two columns is enough. Here I am going to show you where we record that building rent expense, right? Right. Now, what's the other document to be prepared? It is statement of financial position, where we write accrued built-in rent in the statement of financial position under the current liability, right? Under the current liabilities, right? Okay. This is statement of financial position. The other one is profit and loss statement, right? Profit and loss statement. Okay. Now the next one is this is then this we are talking about built-in rent now, right? I think you remember double entry for the accrued expense, right? Built-in rent expense, rent is enough, right? Built-in, right? Rent expense account, debit, accrued rent account, credit. Then here accrued rent account, this is rent expense account, rent expense account. Then this is what? What is this? This is what? What is this, right? This is general journal, right? General journal. Date, journal voucher, this is a source document, description, debit and credit, right? There's another small column, but we don't, it's not important column, right? That's why I draw this one, right? If you need, you can add the other ledger page column also, but we don't write anything there, right? So now this is the thing, but we need the details now, right? We need the details. We need the details now. What are the details? It is given there, right? 8,000 into 12, it is the total amount of rent expense for the year, but they have paid only 8 months. Then in the cash book, they credited 64,000, 8,000 into 8, 64,000, right? In the cash account credit side, built-in rent account, rent expense account, debited how much? 64,000. Here, but it's better if you do these necessary changes in the ledger accounts first. It's easy for you, right? So then I enter these details in the ledger accounts first. Then we can bring them to the general journal. It's easy method, right? It's very easy method. Then I move to the ledger accounts first. Then you write 64,000 in the rent expense account. Why? Why? You can see that 64,000 in the rent expense account because they already paid it, right? Okay, right? Then first we name the columns. No, it's very easy. Date, description, ledger page, cash, or value, right? Date, description, ledger page, cash, or value, right? Date, description, ledger page, cash. Date, description, ledger page, cash. Okay, right? Now we enter the details here. 12/31 The date is given. Then cash account credit side, rent expense account debit side how much? 64,000. This is the value you can see in the rent expense account because they have done it. Right? Now, how much to be adjusted now? How much to be adjusted? If the total is 96,000 and also they paid only 64,000, how much to be paid more? To 32,000. 32,000, right? Then it comes like this, 12/31st. If you want, I can use another color. What you say? I can use another color, right? What's a double entry? Relevant expense account debit, accrued expense account credit. Then rent expense account, you write accrued expense, accrued expense. If not accrued rent, 32,000. In the rent expense account, you write accrued expense, accrued rent expense, right? Then accrued rent expense account goes to credit side, how much? 32,000. There you write rent expense. Rent expense, right? Put the same date, 12/31st. Now tell me how much the total rent expense for the year. How much? 64 plus 32, 96,000. 96,000. It is the amount to be recorded in the profit and loss statement, right? Only the accrued portion, it is current liability. It goes under the statement of financial position under the current liability, right? Now, you can get the total of this. $96,000, 96,000, difference also 96,000. There you write what? Profit and loss statement. You bring this balance profit and loss statement, you write it under the profit and loss statement under the administration expense category, right? This is the liability. This is a liability. It goes under the current liability. So you can balance off 32,000. Here also 32,000. Difference also 32,000. Balance carried down. Balance brought forward. 32,000. Sometime you may think, so why the difference, this difference you transfer to the profit and loss statement, can't you transfer this balance to the statement of financial position? No. Why? Income and expenses we never bring to the next accounting period. We bring only net profit or net loss to the next accounting period. That's why I think you remember when I draw the profit and loss statement, after found the net profit, what we wrote there? Net profit carried to capital account. Capital is in the statement of financial position. In the statement of financial position, you can see only the capital, assets and liabilities, right? So, any business, they bring only the liabilities, assets and equity, means capital, to the next accounting period. They never bring income and expenses. income and expenses account, they transfer to the profit and loss statement. That's why I do the same thing here. After doing the old adjustments, this is a rent expense account, so we get the total of the difference. We don't bring to the next accounting period, we bring transfer to the profit and loss statement. But here liability we can bring to the next accounting period. That's why we balance carried down, balance brought forward. We did like this. We write this 32,000 in the statement of financial position under the current liability. Now we go to there. Oh, first we go to the general journal. No, general journal entry. First you do that one, right? Then in the general journal, how do we record? First you put the date. What's the date? End of the period, not 12/31. Okay. What is the debit account? Rent expense debit. Rent expense account debit. How much? 32,000. 32,000. Rent expense account debit 32,000. Accrued rent. Accrued rent account credit 32,000. Then what you do? Within brackets you put what? Within brackets you put narration. Narration. You know the narration? Narration means after recording transactions in the general journal, you should give brief description about the recorded entry. You have learned this in grade 10. I think you remember now, right? After recording transaction in the general journal, you must give a brief description there within brackets. That is called narration. 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 Right? Now, recorded accrued rent expense of 32,000. Right. Now we have done two steps. What are the two steps? What are the two steps? First one is recording adjustment entries in the general journal, but practically we did that thing in the ledger accounts. But next step is general journal, ledger accounts. After the ledger accounts, we bring them to the extract of financial statements. We bring to the financial statements. Here they ask only extract, right? Then we'll see how to do, right? Now already done profit and loss statement. Now tell me, rent expense, it goes under the administration expense category or distributing expense category? Administration expense category, right? So here profit and loss statement, you write, you name administration expense. Administration expense. Under this you write rent expense. Rent. How much the rent expense? 64,000, 32,000 or 96,000. You see the above account now. Rent expense account. Total how much? 96,000. This include paid. If you want, I can classify them. This include what? Paid 64,000 included. Paid. Huh? Just I draw this to understand for you. And other 32,000 is what? To be paid. right? To be paid plus paid, to be paid 32, paid 64. The total money, total amount you write in the profit and loss statement. Only the to be paid expense, it means 32,000. We write in the statement of financial position under the current liability. You think this is the area of the current liability? Under the current liability. What we write here? Accrued expense. Accrued rent. Rent now. How much? 32,000. This is the way. I think you understood well. I'll revise, right? The things what I have taught under this transaction. When they give the adjustment, when they give the adjustment transaction, what you do first? You do the calculations first. You do the calculation, how much the annual income or annual expense, how much they already paid, and how much the to be paid amount. You can do this thing. You can do the calculation in a paper. After that, you draw general journal. Why? Only one journal we have to record adjustment entries. It is the general journal. Then you draw the general journal. After that, you draw the ledger accounts. Ledger accounts, right? Generally, we say T accounts, but you have to draw the full format. You must remember, right? Then you draw the extract of financial statement. If it is a full question, you have to draw the full profit and loss statement and statement of financial position, right? Here, when they give the only one transaction, so then you draw only extract of the profit and loss statement and statement of financial position. Remember, practically when we do, where we enter the details in the general journal or ledger accounts. When we do the question, it's easy to record first in the ledger accounts, but normal procedure is general journal, ledger accounts, then finally financial statements. But remember, first we enter the details in the ledger accounts. After that, the relevant entry we record in the general journal. Then we do the necessary changes in the profit and loss statements and statement of financial position. Now we go to the second transaction. Second transaction. Electricity bill was paid by cash 18,000. Month of December bill of 3,000. Still not paid. Right? Then electricity bill. I taught you have to do the calculation first. Electricity bill paid. Paid. How much paid? Paid bill how much? Paid bill how much? 18,000. You know these are the rupees, not dollars, huh? Rupees, not dollars. Month of December bill of 3,000 still not paid. Then accrued how much? Accrued the bill, accrued expense. Accrued bill how much? 3,000. Already paid 18,000. Month of December payment to be paid, still to be paid, still to be paid. We didn't pay. How much? 3,000. The total electricity bill expense for the year how much? How much? 21,000. Right? This is the amount to be recorded where? In the profit and loss statement. Accrued where we record? In the statement of financial position. Say understood or not? Then I decorate the second one than before, than the previous one. When I do this everything in the first one, it's difficult to understand you. That's why I did a little change now here. In the first one, I just did the calculations. Now, I did the calculation and I break them where it goes and where it goes. Right? Paid bill 18,000. Okay. Paid bill 18,000. Can you see? This is the paid amount. Right? Accrued bill how much? To be paid 3,000. Right? Then total bill for the year 21,000, whether you paid or not, whether you paid or not, whether you paid or not. Full water bill or full electricity bill or full insurance or advertising or whatever. Whether you paid or not, the full amount of expense you must record in the profit and loss statement. But you remember, only the portion, only the expense still not paid completely. It means like have to pay. How much you want to pay more? Accrued expense portion you write under the current liability in the statement of financial position. This is the just calculations. Right? Now you remember what are the formats we have to draw. First one is general journal format. But we enter the details first. Ledger accounts, right? Then ledger accounts. After that, profit and loss and statement of financial position. Right? Now, see here. Now I think you can understand well than before. What is this? General journal. General journal. After that, ledger accounts. Date, description ledger folio, value or cash. Date, description ledger folio, value or cash. See, this is straight, no? Then what else? What are the other formats? Profit and loss statement and statement of financial position. Profit and loss statement and statement of financial position also you have to draw. I think it's better if I can draw it here, then easy to understand to you. Then I use the another color. What is this? Statement of financial position. Then this is the profit and loss statement. Profit and loss statement. Then here two ledger accounts. date, description, ledger folio, cash. Date, description, ledger folio, cash. What's the name of the account? This is regarding what? Water bill or electricity bill or what's the bill? Date, description, ledger folio, cash. Name the general part also. General journal. Date, journal voucher, description, debit and credit. Okay. Now, if you want, you can see the details again. Electricity is regarding the electricity bill. Paid bill is 18,000. Right? Accrued bill is 3,000. This is electricity bill. Then you got the electricity bill account first. Electricity bill. This is accrued electricity bill. Accrued electricity bill. Then electricity bill account debit, accrued electricity bill account credit, only the accrued portion, accrued value, but they already paid how much? 18,000. It should record in the electricity account. Which side? Debit side. We have done in the previous transaction also. There we write as cash. How much? 18,000. It is the amount they have paid, right? This is not the transaction. This is just only detail, right? Now, under the question, they have given month of December bill 3,000 is to be paid. It means accrued bill is 3,000. It is the value to be recorded here. I use another color to record the adjustment. 12/31st, same date if you want. Yeah, same date you put 12/31st. 3,000 is the amount of expense to be paid. What is the accrued electricity? A means accrued electricity. I use short words here, right? Accrued electricity 3,000. Then accrued electricity account credit side 12/31st as electricity. How much? 3,000. 3,000. Right? Now you know the double entry. In the last video also, I have given what is the double entry. In the last transaction also, we have done the same thing. Then you can understand. Every time in the general journal, we enter only the adjustment entry. Right? Not the paid cash payments and receiving cash part. Payable and receivable. Right? Okay. Now what you do? Then you can get the total. Again I change the color. Right? Then say how much? 18,000 plus 3,000. How much? 21,000. 21,000. Here 21,000. 21,000. Profit and loss statement. Remember, every time after recording the adjustment details in the ledger accounts, every income accounts and every expenses account we transfer to the profit and loss statement. That's why we transfer this one profit and loss statement, right? Now if you want, you can see above calculation, we got it now, 21,000. At the beginning I told you profit and loss statement. Now 3,000 goes to the statement of financial position. Now I am going to balance that one, right? Then 3,000 balance carried down, balance brought forward 3,000. Where we record this one under the current liability, right? But you don't like this, right? It goes under the current liability as accrued electricity bill of 3,000. You remember, now we have to enter the details in the general journal. Now we move to the general journal. General journal, right? There we write only the adjustment entry. How? Electricity expense account debit, expense account debit, how much? 3,000. Accrued electricity expense account credit 3,000. You give the narration, you know, recording of, if not recorded, accrued electricity of 3,000. It finishes? Still not. We have to do one more thing. What is that? We have to bring the ledger account details to the financial statements, right? How much you write in the profit and loss statement? 21,000. It is electricity. The electricity where we record? Electricity normally where we record? Under the distributing category or administration category or where? Administration, right? Administration. What is that? Electricity. How much? Electricity. 21,000. Under the current liability, you write accrued electricity, accrued electricity 3,000. Creditors and bank overdraft and those all the short term liabilities we can write under the current liability category. Now we have done two. Again I'll revise you. When they give the adjustment, we have to enter them in the general journal after the ledger accounts. If it's an income account, it goes to the finally after recording the adjustment, we transfer to the profit and loss statement. Only the assets, capital and liability accounts are there. We balance of them as balance carried down and balance brought forward, and we enter them under the current liability or current assets or in other area in the statement of financial position. After enter the details in the general journal, you have to give the narration also. These are the steps. Now we have done two transactions. to adjustments, how to record them in the general journal and ledger accounts, and how we bring to the financial statements. Now we move to the next one. There are 6 transactions given in my slide. I do 3 out of them. Other 3 you can practice at home. Now we go to the last one in this lesson, last one, right? Other 3 you can do at home. This is the next transaction. Interest rate of 12% annually is for the bank loan of 80,000 which had been taken on 1st of December 2020. December month interest was not paid yet. Annual interest. Annual means interest rate for 12 months period. But you remember, if you have taken after 6 months in the current period, no need to pay interest for the 12 months. Why? You have taken on after 6 months, no? Then you have to pay the only other coming 6 months time period, right? Here again I read the adjustment transaction. Interest rate of 12% annually is for the bank loan of 80,000 which had been taken on 1st of December 2020. 1st of December. This year also ends, the accounting period starts on 1st of January 2020, right? Year ends 31st December 2020, right? But the problem is they have obtained the bank loan on when? 1st of December 2020. Now tell me how many months you have to pay interest. How many months to be paid interest? Only 1 month. Why? You have taken the bank loan on 1st of December. If you have taken it 1st of January, then you can pay for 12 months, right? Then how do we calculate it? See, like this. Bank loan amount is 80,000. 80,000 into how many interest is 12% interest. When you calculate 12%, you can get the interest for the whole year. But the problem is here, they have obtained bank loan on 1st of December. Then into only 1 month interest, 1 over 12. Then here and here, here and here. How much the interest for the month of December? How much? 800 rupees. Did they pay this amount? No. Clearly they have given December month interest was not paid yet. Remember, the full amount of interest for the year means for the month of December. Why we say month of December? They have obtained the bank loan on 1st of December. Then we have only 1 month time period to pay interest for this year. But in the next month, you have to pay for the whole year. Right? They didn't pay even 1 cent. Then what you do? The total interest expense for the year, 800. Accrued expense also 800. Why? They didn't pay even 1 cent. That's why. Right? Now, we draw general journal and we draw general journal and ledger accounts and extract of financial statements. Date, journal voucher, description, if you want you can add ledger page, I remove this one, right? I remove. Why it's not important? That's why I remove, right? I use here debit column and credit column, right? Okay. Now, debit and credit, right? This is the general journal. You know, now we have to draw more two accounts, two ledger accounts, date, description, ledger folio value, date, description, ledger folio value. Date, description, ledger folio value. Then we need what? Extract of financial statements, profit and loss, and statement of financial position. Profit and loss statement. Other one is statement of financial position. Here actually we use what? Only the part of the profit and loss statement and part of the financial statement, means statement of financial position, right? SOFP, statement of financial position, right? Here we need only the current liability area, right? That's why we write current liability, right? Underline. Here profit and what? Loss statement. Profit and loss statement. Remember, these are everything inside we write rupees, right? Then you know the bank loan interest, no, it comes under the financial expense category. Financial expense category. Now you name these two accounts, right? Date, description, ledger folio cash. 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 You name these accounts also. Accrued interest, accrued interest, interest expense account, bank loan interest expense account, accrued bank loan interest account, but we can use interest expense, accrued interest, you know this, right? Then general journal, date, journal voucher, description, debit and credit. Okay. First we enter the details in the ledger accounts. The problem is not like in the previous activities. In the previous activities, some amount they already paid, not the full amount. Some part of the expense they have done. So, in the relevant expense account debit side, we have recorded as cash the amount that how much they had paid, that amount we have recorded. Here, no anything to record. Why? The bank loan interest is 12% annually. They have obtained bank loan on 1st of December. Only 1 month interest we have to pay. But even that amount also they didn't pay. They didn't pay the month of December payment. It means for the whole year they didn't pay. Then directly we can enter the details to the ledger accounts. The amount is 800. 12/31st we put, because end of the year we do this one. 12/31st. Value is 800. Interest expense account debit as accrued interest. A means accrued, right? Then accrued interest account credit side as what? Bank loan BL interest. How much? 800. 800. Okay, now what you do? You can balance off the accounts, right? Expense account balance, and we transfer to the profit and loss, right? This one the same amount. Why they didn't pay? 800. Here date column, is this date column? No, it is cash column, right? You cut it, right? You remove this, right? It should come here 12/31st. Change it here. This is a cash column, right? Here, so I by mistake I put into this column, so I cut it now, right? It goes to the date column, right? Then here 800 rupees. 800 rupees. Balance carried down. Balance brought forward 800. Right? Where we record this one under the current liability. Current liability. This one I named it now, profit and loss. Right? We bring those details to later, but first we have to enter the details in the general journal. Then how do you record them in the general journal? Like this, 12/31st. Interest expense account debit. Interest expense account debit 800. Accrued interest. Accrued interest account credit 800. Narration recording of, if not recorded, accrued loan interest. Loan interest of 800. Now we enter the details in the ledger accounts and general journal also. Now we have to bring the details to the financial statements, right? Profit and loss under the financial expense, because it's an loan interest. It's a loan interest. Interest expense. If you want, you can write bank loan interest expense, right? 800 rupees. The full amount to be paid, still not paid. So accrued, A means accrued loan interest. Loan interest, how much? 800. This is the way. Now I have done in this video 3 adjustments 1, 2, 3, right? 4, 5, 6. There are more 3 adjustments, right? You can follow the same way what I have done here, right? You draw general journal and you draw 2 ledger accounts and you draw extract of profit and loss statements and statement of financial position both, and you can enter that you do the calculations first and like that, so you can enter the details and you can refer again and again this lesson to understand, and when you do the other 3 activities at home. If you want to see this other 3 transaction, I can again see you, right? See, these are the 3 adjustment to be done at home, right? Look at here, right? Accrued telephone bill as at 31st December 2020, 3,000. Then you can do, right? You enter this 3,000 in the general journal, ledger accounts and financial statements also, right? Then next one, carriage inwards to be paid, 2,000. You have to pay 2,000 carriage inward expense, right? They didn't tell about how much they have done, they have paid this everything, anything they didn't give. So you consider this is the amount of carriage inwards to be paid expense, right? Using the double entry, you enter the details in the general journal and ledger accounts and financial statements, right? Then next one, annual stationery expense is 19,000 but paid only 5,000. I'll do the calculation only for this one. It's easy for you. They have paid how much? Annual stationery expense 19,000. Yeah, paid only 5,000. 19,000 is the full amount, right? But they paid only 5,000, right? How much you want to pay? 14,000 to be paid, right? To be paid, payable, accrued, accrued, payable, right? This is the amount you have to enter in the general journal and ledger accounts, right? Ledger accounts, that 19,000 you must remember it goes to the profit and loss statement, right? Then 14,000 under the current liability in the statement of financial position. You know well now because you can refer the activities that I have done, right? Now I go to the new one. In the previous video also I have given the definition what is an accrued income. Today also I give the same definition and the double entry. It will give big support you to do other 2 activities, right? Okay, now accrued income. Accrued income is an income which are related to the current accounting period but still not received by cash. It's an asset to the business. Accrued expense is expense which is related to the current accounting period but still not paid by cash. If it's an income, accrued income, do you pay income? No, you will receive. Then here accrued income is an income which are related to the current accounting period. Yeah, that is related to the current accounting period, but the problem is the money is not come to the pocket. Money still not received. That's why, right? It's an current asset. That is current liability. This is current asset, right? Now double entry comes like this. Accrued income account debit, accrued income account debit, accrued income account debit, income account credit, because income account credit, you know it, right? Okay, there also I have given only 2 activities. It's enough, right? Then we'll see how to record them in the general journal, ledger accounts and extract of financial statements, right? Okay, this is the 2 adjustments. Examples. Following details are related to the Janam's business, Janam, right? And year ends on 31st December 2020. Year ends 31st December 2020. Received annual rent income by cash 50,000 and to be received rent income 10,000. To be received rent income 10,000, right? We try to do, right? Now this, I use another color, right? I use another color. right? How much the amount of money you received? Amount of money you received? Annual rent income by cash 50, to be received 10, right? Received rent income, received rent by cash, how much? 50,000, right? 50,000. Even though you have received 50,000, you have to receive more 10,000, right? You have to receive more 10,000. We said to be received. To be received 10,000. The total income 60,000. This comes under the other income, right? Other income category. Other income. Only the to be received amount, to be paid, where we wrote current liability. To be received, current assets, right? This one comes to where? Current assets. Right? These are the calculations, right? Here also we have to use the same thing, what? Same materials, same tools, what? General journal, ledger accounts and financial statements, right? Now I draw, right? Now, general journal, right? Date, journal voucher, description, debit and credit. General journal. Then what you need more? More two accounts. Date, description, ledger folio value, date, description, ledger folio value. Okay, now what we need? We need what? Statement of financial position and profit and loss statement. Okay, now we names the columns and accounts. Here what? Statement of financial position. We need here under the current assets. Right? Here profit and loss statement. There are other income. Under the other income, we write. Right? Now the next one, ledger accounts, right? Ledger accounts. Date, description, ledger folio cash, date, description, ledger folio cash. Here also same, date, description, ledger folio cash, date, description, ledger folio cash. Then you can name this one also general journal. Date, journal voucher, description, debit and credit. What is the income? It is the income, rent income, right? Rent income received by cash 50,000, right? Then cash account debit, rent income, say rent income account where? Credit side. Rent income account, credit side, right? You put the date 12/31st. This is the amount already received, 50,000, right? How much the to be received value? To be received value is 10,000. It is the adjustment detail, right? Then what's the double entry I have given before? Rent income account credit, accrued rent income account debit, 10,000, 10,000, right? Then 12/31st. Accrued rent 10,000, right? We write as accrued rent, but in the rent income account, accrued rent account, rent expense account, it comes to the debit side because it's an asset like a debtor, rent income. How much? 10,000. Okay, now we get the total 60,000. Here 60,000. Total also 60,000. You know, expense and income accounts. Expense and income accounts are transferred to the profit and loss statement. In the previous activities also, all the expenses accounts, you remember, I transferred to the profit and loss. Here also the income we transfer to the profit and loss. Then here we write profit and loss, right? If you want to see it, I can highlight. This is the value we transfer to the profit and loss, right? Now I balance off this one. Accrued rent 10,000, 10,000, 10,000. Balance carried down, balance brought forward 10,000. Where we write? Under the current assets we write, right? But before we enter these details to the financial statements, we record the entry in the general journal, right? General journal. Now general journal you can see here. We enter here what? We enter only the adjustment detail. It is 10,000. What is that? Accrued rent account. Accrued rent. Accrued rent account debit 10,000. Rent income account. Rent income account credit 10,000. What's the narration? Recorded accrued rent of 10,000. Now you can enter the details in the financial statements, right? Financial statements, right? Other income, how much you write? The total income. Rent income. rent income. How much? You can see the rent income account, the total. I have recorded there, I have written there. Profit and loss. The amount is 60,000. How much only the amount to be received? To be received amount, how much? To be received amount, how much? How much to be received? Only the 10,000, right? 10,000. It is what? Accrued rent income. A means accrued rent income. Yeah, it's finished now. Now I move to the next transaction. It is the second one which comes under the accrued income category, right? Now see the question. Open a fixed deposit of 200,000 on 1st of April 2020 with the annual interest of 12%. December interest should be received. Okay, December interest should be received, right? Now they opened a fixed deposit, the value of the 200,000 rupees. They opened it on 1st of April, right? 1st of April. Someone's birthday, no? Right? 1st of April. Then remember 1st of April, but year ends 31st December. 31st December. No interest for January, February and March. Only for 9 months, right? But the problem is only the December interest. Yeah, is it December? Yeah, December interest to be received. First we calculate how much the interest for the year, right? 200,000 fixed deposit, 200,000 it goes, right? 200,000. 200,000. $200,000 into 12. 200,000 into 12. I use another color for the calculation. 200,000 into 12. Right? Then when you calculate this one, you can find total interest income for the year, but 1 over 12, then you can find how much the interest for the month, right? Monthly interest, monthly $2,000, right? Then you opened it on 1st of April. Then how many months you have? You can collect interest. First 3 months, no. Then 9 months, right? Then total 9 months, how much? 9 into 2,000. This is the interest for this year, 18,000. But there's a problem. What is the problem? April, May, June, July, August, September, like that. All the months interest already received. Only 1 month still not received. It is month of December. Then accrued interest, how much? Accrued interest, month of December 1, 2,000, right? Then actually how much you have received now? 16,000 you received. This goes to the profit and loss. This goes to the accrued. Then it's better you can write down this. This is the calculation. 200,000 into 12%, 1 over 12. Then we can find monthly interest. Why we take 9? Because they have obtained the they have deposited, opened an account, no? Fixed deposit. They opened the account on 1st of April, on your birthday, right? 1st of April. Then 9 into 2000, 18,000 for the year, but accrued interest only month of December interest still not received. That's why we consider 2,000. Yeah, monthly interest, then 18,000 minus subtract 2,000. The 16,000 is the money we received. Money we received, right, by cash, right, by cash. To be received 2,000, right, it goes under the current assets. This is, profit and loss statement, right. Then we have to draw what? General journal, ledger accounts and financial statements, right. Profit and loss and statement of financial position. Hurry up. Now we draw. This is general journal, date, journal voucher, description, ledger page if you want, but this is enough, right? Yeah, right. Now it's okay. Next one, there are two accounts, date, description, ledger folio value, date, description, ledger folio value, right? Okay, now you can name date, description, ledger folio value or cash, right? Date, description, ledger folio cash. Here also same date, description, ledger folio cash, date, description, ledger folio cash. What are the accounts? Interest, income account, and what? Accrued interest income account. Accrued interest income account. Now we have to draw financial statements also, no? Only just extract of financial statements, right? I want to change the color. It's blue now, right? Change it to red, right? Profit and loss statement, only the other income area enough, right? Statement of financial position under the current assets area is enough, right? Here, this is statement of financial position, right? Current assets, current assets. Here, profit and loss statement. Here, under the other income. Other income, right? These are the details, but we have to name the general journal, general journal, general journal, date, journal voucher, description, debit and credit. Okay. Now we have finished drawing part, general journal, ledger accounts, profit and loss statement and statement of financial position. Now we get the details and we enter to the general journal, ledger accounts and financial statements, right? Now see the details. You have done the calculation. The total income to be received for the year 18,000. We use 9 months only because open the fixed deposit after 3 months in the current accounting period. So first 3 months no, other 9 months, right? Then 18,000 is the amount for the year, but accrued 1 month interest still pending. Then accrued is 2,000. The 16,000 already received, right? Now when you receive cash account debit, interest income account credit, how much? 16,000. Cash account, cash account debit, this is credit. Now okay, we have to receive more 2,000, then it is the amount to be recorded here. Same date, 2,000 we put here, right? We write accrued interest, accrued interest. Accrued interest account debit 2,000. Here interest income, the date you put 12/31. Now what you do? You can balance off the accounts, right? 16,000, not the 16, it should be 18,000. 18,000, 18,000. Income or expense, where? Profit and loss. It goes to the profit and loss statement, right? This 2,000 we balance off 2,000. Here 2,000. Difference also 2,000. Balance carried down. Balance brought forward 2,000. It goes under the current assets, right? Before we bring them to the financial statement, we record the entry in the general journal. How do we record it? We write like this, only 2,000, right? 12/31. Accrued interest account debit, how much? 2,000. Interest income credit, credit 2,000. Narration you write, recorded accrued interest income of 2,000. I think you can see clearly, right? Now we can enter the details to the profit and loss and statement of financial position, right? Profit and loss statement, how much you enter? The total interest, how much? Interest income 18,000. 18,000. Under the current assets, accrued interest income, how much? Only 2,000. This is the way. If you want, I can analyze this one. This 18,000 include what? 2,000 accrued and 16,000 received by cash. This is the total we entered there, but this 2,000 under the statement of financial position we enter, right? In this video, we practice more and more activities related to the accrued income and accrued expense. I think you understood well. In the next video, we can discuss about bad debts and depreciation, those things, right? We will see in the next video. Okay, thank you. Bye.